Welcome back to the deep dive. You've sent us quite a stack today, haven't you?
Yeah, definitely. A real mix.
We've got news articles on the freight market, insurance, this slightly wild story about a goat.
That one caught my eye.
Right. And some really important stuff about technology, driver well-being too. So our mission, as always, is to sort of unpack all this for you.
Make it make sense.
Exactly. Pull out the key insights, connect the dots, and really show how it affects your life on the road. We're trying to see it from all angles, like Hervey from Life as a trucker always emphasizes.
Yeah, taking these different stories and building that bigger picture for everyone listening, giving some solid takeaways.
Okay, let's dive right in then. This freight market situation. We've got this article, Even JB Hunt Can't Dodge the Freight Funk. That headline alone, it says a lot.
It really does. When a giant like JB Hunt reports an 8% drop in operating income, you know it's not just the small guys feeling it. It's systemic.
So what's driving that? According to the article, anyway.
Well, it points to a few key things. First, overcapacity. Just too many trucks chasing not enough loads. That's basic supply and demand, right?
Right.
Then you've got soft rates, shippers have more leverage, and overall demand is kind of flat. High inventories, maybe lower consumer spending, manufacturing slowing down a bit.
Right.
It all adds up.
So connect that for us. If JB Hunt's feeling that, what does it mean for, the driver listening right now?
Well, it translates pretty directly. For company drivers, maybe fewer dispatched miles, possibly shorter runs, less opportunity for those extra miles that boost the paycheck. And for lease operators, it's a tough spot. The article mentions this. Those truck payments, they don't go down just because freight is slow. That's a fixed cost that really squeezes the margin.
Yeah, that's a killer. And what about newer folks, first-year carriers?
That's a high-risk group right now. The article highlights it often. Less cash reserve, less experience navigating a downturn. Some might, unfortunately, have to call it quits.
Oof. And it's not just miles, is it? We're hearing about potential cuts elsewhere.
Yeah, things like perks, bonuses, maybe even fuel discount programs could see cutbacks as companies try to tighten their belts. It's happening across the board.
Okay, so if a big carrier like JB Hunt might react by, say, cutting underperforming divisions, maybe boosting automation or AI in dispatch, leaning more into brokerage, what can owner-operators or small fleets do? What are the moves?
Adaptability is key. For the smaller operations, it's really about ruthless efficiency.
Okay.
Looking hard at your lanes, which ones actually make money. Watching fuel costs like a hawk. That's one area the article notes you often have some control over.
Right.
And maybe prepping for a potential recovery later in the year, maybe Q3, Q4. Just being lean and ready if things pick up.
The article also mentions some, let's say, less talked about side effects of a slow market.
Yeah, it did. One point was this idea of a market purge, weaker players getting forced out.
Yeah.
That's tough, but it happens.
And the broker situation.
Right. The concern raised is that some brokers might, take advantage, offer really low ball rates, maybe stretch out payment terms, or even ghosting drivers after a load. It stresses the need for due diligence. Know who you're working with.
It really hammers home that old saying, doesn't it? It's not what you gross, it's what you keep.
Exactly. Chasing cheap freight just to keep the wheels turning can dig you into a deeper hole.
And the article warns about other traps, too, like those lease purchase deals that sound good up front.
Yeah, potentially predatory deals. Or putting off maintenance, that's a dangerous game. Delaying repairs saves cash now, but can cost you way more down the road. And just not knowing your numbers, your break even per mile, you have to know that.
So the takeaway is basically run lean, think sharp.
Pretty much. Run lean, think sharp, and keep your eyes on the long haul. Trucking is cyclical. Downturns happen, but they don't last forever. The article gives that reassurance, which is important.
Okay. Now, speaking of unexpected things, let's completely shift gears. This goat on the clock piece,
Yeah, chuckles slightly. Yeah, that one's memorable. A goat just wanders into a locked truck.
Apparently. Makes itself comfortable. It's just such a perfect, bizarre illustration of how unpredictable trucking life can be, right?
Absolutely. You think you've planned for everything, and then goat.
And it wasn't just the goat. The article mentioned other weird wildlife encounters drivers have had. Snakes, stray dogs, raccoons raiding the cab.
Cattle on the highway.
Even a wild turkey through the windshield. It's like a whole hidden side of trucking.
It really is. You spend enough time out there, you're bound to see some strange stuff. But this story, beyond the humor, actually has some practical points.
Like what? Besides maybe carrying goat repellent.
Chuckles. Well, number one, lock your cab. Always. You
Okay.
never know. And maybe, yeah, keep some extra cleaning supplies handy just in case of, unexpected passengers.
Can you just picture that call to dispatch? Yeah, running a bit late. There's a
Yeah.
there's a goat situation.
You'd absolutely need photo evidence for that one, no question.
But it highlights something else too, doesn't it? The article kind of hints at it.
Resilience? A
Yeah.
sense of humor?
Yeah. You need that in this job. Things go wrong, unexpected things happen. Sometimes you just have to laugh, deal with it, and keep rolling. The goat story, funny as it is, kind of underlines that.
Definitely. A good reminder.
Okay. Let's move to something definitely less funny, but really important. Restroom roulette. That title says it all.
Yeah, this one hits home for a lot of drivers. Access to clean, functional restrooms. It sounds basic, but the reality can be pretty grim sometimes.
The article describes the common frustrations: out-of-order signs, just plain unsanitary conditions, no soap, no paper towels.
And it stresses this isn't just an inconvenience, it's a health issue. UTIs, bladder infections, kidney stress from holding it, it's real.
Plus the mental stress, right?
Mm,
Always wondering where the next decent stop will be, and basic hygiene and safety concern.
absolutely. The article contrasts new drivers' reactions, often shock, with experienced drivers who sort of resign themselves to it, developing coping strategies.
Like carrying travel urinals, wet wipes. It's kind of sad they have to do that.
It is. And while drivers might use humor to cope, like the article mentions, the underlying feeling is frustration, a sense that they deserve better, especially given how vital their job is.
The article also specifically called out the challenges for women drivers, too, which is a really crucial point.
Very important. Facilities often aren't designed with their needs adequately in mind.
But it wasn't all negative. It did give credit where it's due, right?
Yeah, definitely shouted out the truck stops, TA, Loves, Pilot, those independent mom and pops that do maintain clean facilities, and acknowledge the drivers who help keep them clean too. It is possible.
And those driver quotes were powerful, saying they'll deliberately spend money at places with good restrooms. That sends a message.
It really does. The bottom line of this piece is clear. A decent restroom is a basic right. It's about respect.
Okay, let's zoom out again to the bigger picture. Tariff tensions. Take a breather. A 90-day pause on new U.S.-China tariffs. Sounds good on the surface.
Kinda. Take a breather is the key phrase there. The article is clear. Existing tariffs are still in place. Negotiations are ongoing. So the uncertainty hasn't vanished.
And how does that uncertainty play out in trucking?
Well, tariffs directly mess with import-export volumes. That means changes in how much freight there is, where it needs to go, affecting demand at ports, warehouses, and it makes rates volatile, especially on the spot market.
So even with this pause, drivers might not see a huge change. Still facing shifting freight volumes, maybe different hotspots popping up, no guarantee of stability.
Pretty much. Importers might get some temporary relief, maybe adjust inventory, but for drivers, it's still likely to be unpredictable. And the article reminds us, the previous rounds of tariffs already caused long-term shifts in supply chains that aren't just going to snap back.
Different reactions from different players, I guess.
Exactly. The article mentions big retailers might use the pause strategically, maybe stock up, smaller importers, still likely struggling with the existing costs. And for independents and dispatchers, it just makes planning harder. That idea of planning load by load really captures the mood.
So strategies involve staying flexible, staying near ports maybe?
Yeah, the article suggests things like staying adaptable, keeping contracts flexible if possible, monitoring where goods are actually coming from now as sourcing changes. Brokers need to stay constantly informed, too.
So 90 days of kind of good news is about right then. A delay, not a solution.
That sums it up perfectly. Cautious optimism, maybe, but definitely heavy on the caution. Keep planning strategically.
Okay, now let's tackle insurance and tech. Big topics. The Trucking Insurance 2025 article sounds like insurers have a lot on their plate. What came out of that MCI EAF conference?
A lot. They're wrestling with how fast technology is changing in trucks. How do you underwrite that risk? Plus, the growing impact of things like climate change, more severe weather events, and cybersecurity threats.
Right.
And then there's AI, how it's being used in risk assessment. And the perennial issue of litigation, those huge nuclear verdicts.
It feels like they're moving past just checking compliance, right? Really digging into the data.
Definitely. ELD data, dash cams, telematics. Insurers are using all of it much more actively to figure out a carrier's actual risk profile, not just checking boxes.
Does the industry feel insurers really get the differences between owner-operators, new carriers, the whole gigification thing?
That's a key point the article raises. There's maybe a gap in understanding there. The nuances between different operating models are complex, and ensuring them requires specific knowledge.
And the article hinted at the downstream effects, the stuff maybe not said out loud at the conference.
Yeah, like drivers ultimately bearing the cost through higher premiums, insurance costs potentially pushing smaller carriers out of business, the affordability gap for smaller players trying to adopt the newest safety tech that insurers like to see.
And maybe some driver resentment, feeling penalized for things they can't directly control.
That's definitely an undercurrent. So how's the industry responding? The article mentions carriers getting more proactive about building strong safety profiles, underwriters specializing more, brokers becoming more like educators for their clients.
It sounds like insurance is becoming almost a driver retention issue now.
The article suggests exactly that. Cost and availability are huge factors. Drivers need to understand their policies, and carriers need to manage this effectively to keep good drivers. It's a major piece of the puzzle.
And that leads perfectly into the Trucking's Digital Divide article. Technology adoption seems challenging.
Yeah, it paints a picture of two different struggles, really. New drivers often feel totally overwhelmed. Too many apps, confusing workflows, maybe not enough training, just thrown into the deep end with tech.
Well, veterans have different frustrations.
Exactly. For experienced drivers, the issue is often unreliable tech, clunky interfaces, systems that feel like they slow them down instead of helping, things that weren't designed with their workflow in mind.
And that feeling of being micromanaged, especially for newer drivers with all the tracking.
Big time. It can feel less like support, more like constant surveillance. For veterans, there's sometimes a sense that the tech takes away from the skill, the soul of trucking, as the article kind of puts it.
So the problem isn't the tech itself, necessarily.
Not always. The article argues it's often the implementation, rolled out without driver input, overcomplicating things, focusing on monitoring metrics over actual mentoring or making the job easier.
And it affects others too, fleet mentors, dispatchers.
Yeah, they're caught in the middle, trying to make it work, trying to support drivers while dealing with systems that might not be ideal.
What are the potential fixes then? The article suggests anything.
Getting drivers involved earlier in testing, feedback, better, more focused training, not just throwing apps at people, and fostering that mentorship culture, connecting experienced drivers with newer ones to navigate the tech together.
So basically, more common sense, better communication.
Pretty much. Reliable tools that actually help, clear
Yeah.
communication, and making sure the job still feels worthwhile despite the technology. More sense, less frustration.
Okay, wow. We've covered a ton. The freight market squeeze, the GOAT, the basic need for decent restrooms, tariff uncertainty, insurance headaches, the tech divide.
That's a lot of pressure points.
It really is. And pulling it all together, thinking about seeing these issues from all sides, like Hervey suggests, it really circles back to something we touched on: the driver, you, and the need to manage your time, not just for shippers, but for yourself.
That's such a crucial point, especially now. With all this volatility, the market costs, having some control, some plan B is vital. We talked about retirefromtrucking.com before, using AI, building side income.
Right, using that off-duty time proactively. It's not just rest time, it can be investment time. Learning a new skill, building something online, exploring other income streams. It's a way to shield yourself a bit from the industry's ups and downs.
It's about building personal resilience, financial resilience.
Yeah.
Taking back some control in a profession where so much feels out of your control sometimes.
And isn't that also about respect? Investing in yourself, building your future, it contributes to your overall well-being, your sense of security. It's empowering.
Absolutely. Supporting drivers isn't just about acknowledging the hard work, it's about empowering them with knowledge, with tools, with pathways to a more stable future.
So let's quickly recap the big themes from this deep dive. We hit the current freight pressures big time.
Yep. And the need for resilience, humor, thanks to the GOAT.
The fundamental need for respect, shown even in basic things like restrooms.
The ongoing uncertainty with trade policy.
The shifting sands of insurance and technology, and how they impact everyone differently.
And wrapping it all up, that critical idea of proactive time management, planning for your own future.
So here's the final thought we want to leave you with today. As you're out there, think about this. What's just one small step you could take, maybe this week, using some of that downtime to invest in yourself?
Could be anything. Listening to a new podcast like this one, but maybe on a skill you want to learn. Doing a quick search on side hustles. Just spending 15 minutes thinking about your long-term goals beyond the wheel.
Because your journey in trucking, it can absolutely be a stepping stone. A way to build toward greater personal control, financial control, no matter what curves the industry throws your way.
Well said.
Thanks again for sending in all these great sources and for joining us on this deep dive. Keep the feedback coming, and we'll keep digging into the topics that matter to you.